My name is Michael Duke, and this is the show where I talk about stocks that are interesting. So if you find that interesting, please consider liking the video and subscribing to the channel. Obligatory Philip Morris video today. Today they released earnings and uh, have sold off 7.5% currently. At one point, they sold off about 10% on the earnings report. So today, we're going to investigate the earnings report, dissect it a little bit, take a look to see if the market reaction is warranted. This is the third or fourth update video I've done on this name. Of course, I'm watching the stock fairly closely, given that it is the largest holding that I have in the portfolio currently. By far, almost 15% of the portfolio is tied up in this one stock. So, as you can imagine, portfolio is underperforming today on the performance of this stock. However, I want to take a look. So, if you want a little bit more background information on what the company does, uh, be sure to check out some of my prior videos if you have not all. Just a quick run through, real quick, before we get into the earnings. Even with the steep drop off today that we're seeing, just in price return alone, the company is drastically outperforming the S&P 500 year to date. Um, the last two earnings reports that were released, uh, the stock did pretty well, popped pretty well on the news. Afterwards, you see here the stock went up, 10% on that earnings report, and it was up another 3 to 5 on the most recent one. So this is the first earnings report, really over the last several. You see a pop here and a pop here. We had earnings here, here, and in here. The stock has done very well on each of the last several earnings reports. This is the first earnings report in a while where we've really seen a sell-off, and that's not too surprising given that lots of strong expectations had been baked into the price. But let's just back up a little bit and take a look at the earnings. To do so, I'm just going to navigate to their website here. Let's go to investor relations right here. Let's take a look at the presentation. Okay. So we're just going to breeze through this and make some observations. Accelerating smoke-free product multi-category momentum in quarter two. Offtake growth step up for IQOS, Zyn, and Vive. Now, one thing that immediately stands out, and I might want to refer to the prior earnings report. Just taking a look at the first quarter here. I guess we did talk about Vive here. I guess we are talking about Vive in the prior reports. Anyways, over 4 billion quarterly smoke-free net revenue. 4 billion net revenue. Annualized, that's 16 billion, $280 billion market cap. So obviously we know this is their income revenue in. They don't have the current earnings report we're looking at put here, but we had 9.3 billion. So we're almost half, just a shade under half of the attribution or contribution. I forget which one is the correct terminology there, of smoke-free products contributing to revenue. Very strong. Best in class growth. We know that that's true. Best in the tobacco sector. High single digit top line growth, mid teens adjusted operating growth, and significant margin expansion to greater than 41%. That's pretty good. They're raising the 2025 forecast to 13 to 15% adjusted diluted earnings per share growth. So interesting that we're seeing a sell off here on increased guidance for the full year. So some comparables here. This is the quarterly versus the prior year. Net revenues up very strong, but below the prior year. Or this is uh, with currency. We see here, I've talked about this before, currency, foreign currency being a tailwind to the stock because the dollar index is down fairly significantly, 12 points. If I just look at a chart here, the dollar index, so dollar index 97.4. 6 months ago, it was 110, right? So dollar index, of course, is a basket, or the dollar versus a basket of foreign currencies. Clear that dollar weakness has been a theme over the last several quarters, and that's boosting earnings. So this stock is, I think it's fair to refer to it as what we call a dollar bear, a stock with significant earnings in non-dollar denominated currencies, but reports earnings in dollars. Gives you a little bit of diversification. So we see here operating income up 15% versus the prior year, 19% earnings per share growth, very strong. And then the first half of the year versus the prior year, we actually see that including currency, it was the opposite. But very, very strong results. High single digit revenue, mid to high teens profit growth. And then in terms of our volumes, as has been the case, smoke-free products with low double-digit growth. Oral up 24%, e-vapor 124%. So I think the e-vapor there is when we're talking about the Vive, and then cigarettes with a modest volume decline. Okay, but again, smoke-free products leading the charge. And then we have total volume growth, low single digits. I don't see anything to be worried about there. Operating income up 15% at the half point versus the prior year on a 250 basis point margin expansion on operating income. Very, very strong. So we know that the smoke-free products have stronger margins than the cigarettes, which is crazy to think about because cigarettes are so strong. But 41% operating margins are very, very lucrative. And then we see here this gross profits growing faster than revenues, both in cigarettes and smoke free. So margin expansion happening across the entire product portfolio. And we also see here what they claim to be sustainable net revenue drivers. Shipment volumes up, but they're getting quite a bit of growth from pricing. I don't fully know how to interpret that, but either way, it looks good, and that's how we get to 6.5% net revenue growth. Notice how in the first half we had our somewhat of a currency headwind. Yeah, that's interesting because again, the dollar index has basically been sliding since mid-January, early January. It's been sliding down pretty much since the inauguration. The dollars have been weakening versus foreign currencies. So a little unclear what the how we're getting currency adjustments there. We would have to look at the individual buckets of currency, but again, pretty benign. I wouldn't say anything is a problem there. Strong gross margin expansion. We know that that's the case. We see here in the first half, gross profit, again, adjusted across all of the product types, 64.5 to 67.6 with a modest currency impact. So that's really good. That's really good. Very, very strong gross margin profile. 5 million more smoke-free product users. So we're seeing penetration in that market. 97 smoke-free product markets versus 95. That all checks out. That's versus the prior quarter, by the way. HTUs, the heated tobacco units, that's the number one smoke-free product brand. This is what the branding looks like. Strong growth. This is a little bit, the Zyn pouches are a little bit more visible to a lot of people that I know, at least in the market. We talked about this ad nauseum prior, but further rapid growth, they say. Global rollout continues. Nicotine pouch shipment volumes up 43% versus the prior year. That's just crushing it. I think in the first video we did, we looked at a piece of data, at least in the first article we did on Seeking Alpha. We pulled data that showed that the estimated compound annual growth rate of the nicotine pouch market estimated at 32% per year. Again, this is just volumes, not even the market price, like the pricing growth. But we know that they increased pricing too, given their prior slides. So up 43% and pricing going up. That is crushing it. We see international nicotine pouch volumes up even stronger, 65% versus the prior year, up 179%, excluding the Nordic countries. Of course, the Nordic countries are really the birthplace of nicotine pouches and a more mature market. But we do see here that the volumes in the United States much stronger than all the other markets combined. So again, the United States continues to be where a lot of the penetration is taking place in the oral category. And we know that given the importance of the United States to the oral category, that does somewhat reduce that dollar bear aspect of the company that we discussed prior. Profitable volume acceleration, further innovation. Number one in 6 markets. V volume, shipments in million equivalent units. I don't know about you guys, but I've seen a lot of these out in the wild. I've seen a lot of people using these actually. Or if they're not these, they look exactly like them. I've never used them, but this looks more familiar to me than the IQOS, just anecdotally. But we see here, and look at this, shipments in million units, 858 million versus 632 in the prior quarter versus 384 in the prior year quarter. So that's more than 100% growth year over year. And that's like almost 30% growth from the prior quarter. So that is mind-numbingly explosive levels of growth. Very, very strong. And then we're singling out Europe particularly. We see here, again, shipment volumes up 31% versus prior year, 148%, excluding Nordics. The European market is very important when it comes to tobacco. More of an established tobacco market, more of a better tobacco market than the United States, less regulatory scrutiny, more acceptance, more smokers. I don't know if you've ever been to Europe, but everybody seems to be smoking there. At least the last time I was there, it's about 10 years ago. Everybody smokes there. 10 years ago is a long time, by the way. But you get the idea. If you've been to Europe, you know what I'm talking about. So we should expect strong combustible volume, strong growth here, and that's what we see. And if I'm not mistaken, that's really almost the entirety of the VEEV business. 733 million of the units out of the 858 million in Europe. So exactly as I'm saying, Europe really is the breeding ground for initial market penetration with a lot of these products. Zyn, of course, being a Swedish brand originally. And IQOS continues to grow high single digits. So all of that looks really good, particularly Zyn too, because there's been a lot of chatter about the Velo Plus pouches from British American Tobacco taking share. Japan continued strong IQOS momentum. These charts look a lot different than the last earnings slide. 48% category share and 32% HTU market share, I believe is what that says. That all looks good. What is this? Impressive ZYN reacceleration as availability improves. Monthly Nielsen offtake volume change versus prior year. ZYN in US nicotine pouch category. Okay, so look at this. So the light blue being the ZYN brand, dark blue being the market. And what we see here is that halfway through the second quarter of last year, that the overall market was growing faster than the ZYN brand, I think is what that looks like. That's what that means, right? Of course, we know what happened last year. If you tried to buy the ZYN pouches, they were out in so many areas. You couldn't get them anywhere. They were, and if you could, you bought up everything you could. There was a supply shock. There was a shortage of ZYN pouches. At least there was in my area in California. And I talked to the clerk who I'm buying them from. He says, "Yeah, I got to go all the way across town to get them from this one location. They only sell me so much, so on and so forth." So there was a supply crunch, and I think that hindered the ability of the business to take market share. In fact, when the light blue line is below the dark blue line, that implies that they are losing market share, right? Or their market share amount is going down, whereas here the market share is going up. Of course, we can't be too concerned about that given the fact that the market itself is growing like crazy. But I think if I look at this, while this looks good here, we're rebounding quite a bit. That's the momentum is returning, and that's really what they're putting in this chart. We see here retail value share 70% and volume share 61.2%. So we know based on those numbers that pricing is premium for the ZYN brand versus competitors. We know that it's the premium brand. But we also see reacceleration. I do believe, though, that one can look at this graph and draw hasty conclusions from it, and that, in no doubt, has led to some of this negative reaction. So this is the first thing I'm seeing where I'm like, okay, yeah, market probably doesn't like that because I don't think we've seen that graph. We haven't seen a graph like that in the prior earnings calls. So I think we're seeing this for the first time. And I have mentioned in previous videos that it does appear that they are losing market share. I inferred that from one of these charts. If it wasn't this quarter here, it was the prior quarter. This is the most damning looking chart that I've seen as ZYN versus US nicotine pouch category. It doesn't bother me at all, but I could see why it would to some shareholders. Significant ZYN growth, shipments subject to quarterly volatility. There we go. Demand strong, shipment dynamics normalizing. Restock completed in the first half, slightly less than expected. Retail availability approaching normal levels, velocities accelerating. Commercial programs restarted. Expect strong H2 offtake growth. So you see here, offtake volumes up, shipment volumes down. I don't really know I'm not exactly sure how to interpret that. I'm going to do some research here. I'm just looking up the definition of Nielsen offtake volume. Okay, so Nielsen offtake volume is the actual quantity of a product that is sold to consumers. So it's a demand side sales metric. That makes sense. Whereas the US shipment volume, that's a supply side metric. In other words, this is what we're supplying to the retailers. Offtake volumes are what those retailers are selling. So you see here some offtake volatility. This is where there was a supply crunch here. If you remember, it looks like there was a little bit here too, but we've just gone back to trend here. And then they expect strong H2 offtake growth. I think that this offtake volume here is more of a leading indicator based on what I now know about it. It's more of a leading indicator where you see a little dip right here, and that kind of manifested itself in here. They don't need to ship as much here. Offtake volumes up, but offtake volumes, of course, are what are driving the retailer demand for the product. These two charts here are what is creating this big sell-off, I would think. I don't see any real reason to be concerned there. I mean, I think that, yeah, the fact of the matter is that they shipped less Zyn in this quarter than last quarter, but that has never happened in a quarter here. There's been some assessment there that the the Velo brand is taking market share. I think there's nothing here that leads me to believe that that isn't the case. I think we know that that is, but the rising tide lifts all boats is really the thesis here with Philip Morris. So I look at this graph. I do see, yeah, we do have some volatility here in shipment volumes, but again, here you really had a drastic increase. We didn't see any sort of increase like this, almost 40 million units. So 190 over 165, that's more than a 10% increase still from this quarter to this quarter in shipment volumes. So a little bit of wobble, a little bit of turbulence doesn't mean that the plane isn't still going up. So if that is in fact what's causing this overreaction or this reaction here, I believe it to be an overreaction, where we had basically a flawless track record of this stock in the last several earnings reports that really reset valuation and growth expectations higher. And now what we're seeing is just more of a reset on those expectations. So I don't see anything problematic about this pullback either. I think it's totally healthy. And just to continue, these are some of the charts that we're a little bit more accustomed to. So yeah, strong smoke-free product growth across global markets. These are the international markets. So strong growth, much stronger than cigarettes on IQOS. However, Vin and Vive really are the big time growth drivers, and these are modest, but strong, modest growth drivers compared to these offtake shares. All of the offtake shares in these cities, Bogota in Colombia and Rabat. I gotta be honest, I don't know where Rabat is. Those are the only two markets that saw a decrease in offtake share, whereas the rest increased. And some of these markets are really strong. Okay, combustible pricing. Another period of combustible pricing growth. They're just continuing to hammer pricing on combustibles. You see that with all of the cigarette brands. Now that I see how the smoke-free products are somewhat of an off-ramp from the cigarette portfolio, a company like this that has the strong portfolio of smoke-free products, they have a lot less to lose by squeezing big price increases on combustibles than a company like Altria, who, while they can continue to raise prices, when they price out customers on Marlboros or something, and they say, you know what, I'll try a smoke-free product instead, they leave Altria as a customer and come to Philip Morris. Whereas Philip Morris, if they increase prices on their cigarettes on Marlboros, because that's what they own internationally, that customer can migrate to the smoke-free product portfolio of which they dominate in. So I don't love aggressively raising prices on the combustibles. It is far in excess of inflation. And we do see that gross profits are increasing quite a bit. But um, I like it a lot more for a company that has the strong smoke free portfolio, which they do. So that's interesting data to say the least. Now let's take a look at this. They're confident in very, very strong 2025, raising earnings per share forecast. Let's take a look at what they said last time. They said, excellent 2025 despite macro uncertainty. Slide up to 2% growth in total shipments versus now they're saying about 1%. So they're actually saying, yeah, volumes may not be as strong as we thought. So that's one reason that the stock may be reacting negatively. Smoke-free product shipments, that is the same, 12 to 14%. HTU, IMS, 10 to 12, 10 to 12. US ZIN shipments, 800 to 840 million. That's what they guided to last time. Again, they raised earnings per share forecast 736 to 749. They raised it again here, 743 to 756. Net revenue 6 to 8%, 6 to 8% here. Operating income 11 to 12.5%. It was 10.5 to 12.5%. They increased guidance on operating income, which they say here. So volume, adjusted diluted earnings per share, or I guess organic wouldn't just be volume, it'd just be non-acquisitive. Anyways, adjusted diluted earnings per share 10.5 to 12.5. So they raised that by a full point, and then here 12 to 14%, here 13 to 15%. What am I missing here? This is pretty much all raised. They basically just said, yeah, shipments are a little bit down. This, however, is consequently in line with shipments being down here. They're saying, yeah. So if we look at this, one thing to note, however, is that pretty much all of these numbers, with the exception of the currency adjusted earnings per share, that all of these numbers are below the way how fast they grew last year, and they are saying that the compound annual growth rate targets are below. So they're actually, it does seem that their 2026 numbers, they're basically being super conservative about that. I like the way that they're guiding to this. Actually, you see here they're basically saying that currency is a 4 to 6% tailwind. Here is what this means. So dollars were strong in 2024. Currency was a tailwind. They grew very strong. Here, their uh, net revenues are not as fast as last year, but earnings per share, there's a currency tailwind there. So that's why the stock is selling off. You have basically what they're showing here, what they're showing here. Honestly, I see no cause for concern personally, as with my shares. You may think otherwise, and this is not investment advice. I'm not a uh, financial advisor. Okay. But to me, I don't really see any cause for concern. The numbers on, what I understand, Zin look phenomenal. The numbers on the Vive look really good. See, I don't even remember Vive sticking out before. And now I'm looking at it, I'm like, wow, those numbers look exceptional. So that's a whole other element to the growth. So the risk in these shares over the last few months was always going to be valuation. You see over the last 6 months up 36%. We're basically back to the price we were in mid-May 2 months ago. The all-time highs like close to 185. So we've just taken a pretty healthy pullback. You see how that's happened a few times. It's pulled back, and that's happening again today. I think this is the most I've seen it decrease in a single day in a while, but nothing unexpected. I look at these earnings and I think I understand why the stock might be selling off, but I don't find it to be concerning in the slightest. Now, one thing of note here is that our Yeah, there we go. That's how we get the price. Technical analysis that we've done before. It's been in this uptrend, and really it failed to break out. It did break out above this, very rough. So it didn't really break out above this trend line here. And support, at least a support line that was confirmed 3 times in the past. 150. I think what we see here, there was a sell-off here. What we're seeing here is that we're pretty much hovering around this support line here. And yeah, I would be curious to just see what happens from here. If the price does break down below where it is now, which really I don't expect it to, I expect it to recover. I expect it to either recover or consolidate along this high 160s range all the way out to this long-term trend line. But again, I could easily see how that wouldn't happen because what did we just do? Man, they've really changed this system since the last time there we go. This bottom line has been intact since last year. This line here has been the uptrend that it's been on this year since the market has begun to price in these higher growth expectations. We've now sold off below that band. I wouldn't necessarily say that this is a buy the dip territory. I'm not buying the dip because again, I'm so over allocated to the stock, and I have other goals, most notably real estate oriented. So I'm not going out of my way to allocate to the stock. However, if I was under allocated to it, I would definitely consider entering here. I also think that it could slide further. I mean, you just never know. It probably isn't the place to allocate a full position. We do see here that it did bounce all the way to the low 160s, and it has recovered somewhat since that time this morning, right? So we already have recovered here. It bounced off of this line very neatly. From a technical perspective, we're somewhat in uncharted territory. This line here provided some support, and we'll see where it goes. Does it continue to consolidate or recover? I would think that would probably be more likely than not, but that remains to be seen. So for now, I'm continuing to hold. I continue to be very satisfied with the results that the company is posting, even despite the lackluster performance today. I don't think that there's any major concerns, but definitely something to monitor as well is, do these shipment amounts stagnate? I think that would translate into somewhat of a reconsideration of the amount of money allocated to the stock in my portfolio. But again, I'm trying not to overthink this, right? I see the long-term outlook being very bright for these products, and it's got the leading market share in. I don't know what the Vive market share is. It says that they're number one in 6 of the markets. So fact check me on this, please, audience, but it does appear that they have the top brand in each of those 3 smoke-free product categories, which again doesn't make a whole lot of sense to get too caught up in the quarter by quarter fluctuations when that appears to be intact. That's all I'm trying to gather from each of the earnings reports. Are they maintaining leading market share? And we are seeing that, despite the fact that other brands have made gains in the oral category. So just something to monitor. I think from a technical perspective, the price has bounced back somewhat nicely. We'll see what it does over the next couple of days and into the next earnings report. I expect the stock to be a little bit more calm than it has been the last few months. I think the parabolic move up has subsided, and now we are into more of a normalization and consolidation phase. I'm perfectly okay with that because I like the income that it provides. And another catalyst to watch for when it comes to the stock price is the upcoming dividend announcement. They are due for a dividend increase. Their dividend growth has been very anemic as they've paid down the debt that they've used to make these acquisitions. Um, their most recent dividend increase was 4-ish%, 5 cents a share. Before that, it was only 3. Before that, it was only 2. Before that, it was 5. Before that, it was 3. So their dividend growth has been very anemic. As far as it compares to other tobacco companies, it's even been anemic, which I think is a huge bull case. Altria has been increasing their dividend like crazy the last 10 years, and they haven't, they plowed money into Juul, which didn't turn out well. Whereas Philip Morris has been more conservative with their dividend and been a lot more risky with allocating capital to growth, and it's paid off. So you see that here, that their 10-year compound annual growth rate on the dividend only 3%. So they already, in their last increase, they did exceed that growth rate. What I'm hoping to see is that they increase the dividend by more than they did in the last quarter or the last year. Like instead of a 4%, it's like 4.5 or 5%. Obviously, if they increased it by 8%, that would be great. And honestly, the stock price would probably do well. However, I think it's always a good practice to increase the dividend in excess of inflation, but not at the maximum level that you can, given that that really prioritizes the long term health of the company. The company, doesn't have a great balance sheet. None of the tobacco companies do. So I would be encouraged and hopeful to see a dividend increase of 5-ish%, which would equate to 7. It'd be like 7 cents a share. So that's what I'm hoping to see, that they increase it to $1.42. And the last time they increased their dividend, the declare date was September 12th. So sometime about 6 weeks from now, we should be expecting to see a dividend increase, and that could provide that's really the next upcoming catalyst for the stock price is the dividend increase, and then 6 weeks later, we have the earnings report. So those are really the next two events. But overall, um, I see no concerns with the earnings, just something to monitor there on the volumes. But if you have a strong position like me, it's continued to be a hold. If you like the stock long term and you don't have a position, you're looking to allocate, I think it's an appropriate time to enter, but maybe not to fill up on a full position given the technical aspects of it. So hopefully that all makes sense. That's going to conclude our video for today. Hopefully that all makes sense and is helpful, useful, and entertaining for you. Thank you for watching. If you enjoyed this video, then please consider liking and subscribing. And also uh, following me on Seeking Alpha, where I provide write-ups of these companies. You see here, somebody's already written an article about it, where I provide write-ups on Seeking Alpha. My viewers can get 10% off a Seeking Alpha subscription, $30 off a premium subscription. So if that interests you and you would like to follow me, please consider doing that. The link will be in the description to get that offer. But as always, I appreciate my viewers for watching. I appreciate everybody out there paying attention. It's always a good time doing this. I'm doing it anyways, so I might as well share it with you all. So I'm going to make a few more videos. I've got some requests that I need to get through, and I will start working on those now once I get this uploaded. So anyways, stay tuned, and I will talk to you soon. Have a good rest of your day, and thank you. Bye.